If you're planning to buy a home in the Pittsburgh area, there's something that you need to know. The home that you fall in love with may end up costing you a lot more than the listing price. And I'm not talking about getting into a bidding war. I'm talking about property taxes that can change after you buy the home, closing costs that can vary dramatically depending on where you purchase, and a Pennsylvania program that could help qualified buyers with thousands of dollars toward their down payment and closing costs. If you're relocating to Pittsburgh or buying your first home here, there are 5 things that you need to understand before you make an offer. Hi, I'm Diane McConaghy, a real estate associate broker with RE/MAX Select Realty, and for more than 12 years, I've been helping buyers throughout Allegheny, Beaver, Butler, and Washington counties. One of the biggest surprises for people moving to Western Pennsylvania isn't the weather, it's how property taxes work. Here's what you need to know. Allegheny County hasn't completed a county-wide reassessment since 2012. That means that the property taxes that you see on the listing are based on the seller's current assessment, not necessarily what you'll pay after you purchase the home. Pennsylvania uses something called the common level ratio to help determine a property's assessed value. Think of it as a way of adjusting today's market value back to the county's assessment base. For the 2027 tax year, Allegheny's common level ratio is 49.3, and here's why that matters. If you buy a home for $400,000, the assessed value for tax purposes should be approximately $197,000 using today's ratio. If the county has properties assessed significantly higher, you may have an opportunity to file a tax assessment appeal. Better yet, there's no fee to file one. One thing many buyers don't realize is that school districts routinely review recent home sales and may appeal assessments after a property changes ownership. It isn't personal, it's simply one of those ways that the school districts manage their tax base. I always tell my buyers that you need to expect that the property taxes will increase after they purchase a home. Sometimes that happens within a few months, sometimes it takes a year or longer. But if the assessment changes a year later, don't be surprised if you receive a retroactive tax bill going back to the date that you purchased the property. That's also why it's so important to work with a lender who understands how property taxes work here in Western Pennsylvania. I want my buyers budgeting for what their taxes are likely to be, not just what the seller is currently paying. If your lender is using the seller's current tax bill to qualify you for your loan instead of estimating what your taxes are likely to be after closing, ask questions. Your monthly payment should be based on realistic numbers, not outdated ones. I can't tell you how many relocation buyers have called me 6 months after closing and said, "Diane, I think something's wrong. My mortgage payment just went up about $100 a month." My answer is usually, "Nothing's wrong. Remember when we talked about your property taxes increasing after closing? This is exactly what we were preparing you for." If you understand that before you buy, isn't a surprise. If no one explains it to you, it can be a very expensive one. My advice is simple. Before you make an offer, don't just ask what the current taxes are, ask what the assessed value is. Then talk with your real estate agent about whether a future assessment appeal is something that you should expect. And one more thing, every county handles property taxes differently. Allegheny, Beaver, Butler, and Washington counties all have different assessment systems, filing deadlines, and appeal procedures. That's why it's important to understand the rules for the county where you're buying, not just the home itself. Now, let's talk about something else that many buyers don't realize. Sometimes the best homes never appear on the real estate websites that you're searching. Most buyers start their home search the same way. They open an app, set a price range, choose the number of bedrooms that they want, and wait for notifications. The problem is that not every home is immediately available on those public websites. Today's MLS gives sellers more choices than ever before. Some sellers choose to delay marketing their home to the public while still allowing agents to see it on the MLS. Others choose what's called an office exclusive listing, where the property is entered into the MLS but isn't publicly advertised right away. That means that a home can be available for showings while your phone never sends you a notification. In many parts of the Pittsburgh area, that's not a major issue because buyers generally have time to look at homes and make thoughtful decisions. But in some of the most competitive communities throughout Western Pennsylvania, places like Cranberry Township, North Fayette Township, Robinson Township, Moon Township, Franklin Park, Wexford, Sewickley, and even some of the smaller communities like Zelian-Opal or Cecil, when inventory is limited, a well-priced home can still sell very quickly. That's where working with an experienced buyer's agent really makes a difference. 2 pieces of advice. First, get connected with a buyer's agent before you find the perfect home. Second, don't be surprised when you're asked to sign a buyer agency agreement before touring homes. That's now a standard practice across the country. It simply establishes that your agent represents your interests, not the seller's. The bottom line is this: the real estate apps are a great place to start your search, but they shouldn't be your only source of information. If you're relocating to Pittsburgh, having an agent who knows the local market can give you access to opportunities that you might otherwise miss. And that brings me to rule number 3, the number that matters more than the listing price itself. One of the reasons why so many people are relocating to Pittsburgh is because compared to many parts of the country, home prices are still relatively affordable. But here's what I tell every buyer that I work with. Don't shop based on the purchase price. Shop based on the monthly payment. I've seen buyers purchase a $350,000 home that costs less each month than a $325,000 home just a few miles away. How's that possible? 3 things determine your monthly payment. The first is your interest rate. Even a small change in your mortgage rate can have a significant impact on your monthly payment. So it's important to talk with your lender about all of your financing options before you actually start making offers. The second is property taxes, and we've already talked about how dramatically they can vary from one community to another. 2 similar homes at the same price can have property tax bills that differ by thousands of dollars a year simply because they're located in different municipalities or school districts. Let me give you an example. Many times I've had buyers fall in love with a particular community, like Bridgeville or Oakdale in the South Fayette School District, only to discover that the property taxes push their monthly payment well beyond what they're comfortable in spending. From their perspective, it doesn't make sense. They look at another home that's about the same size, has a similar layout, and is in comparable condition, say in Kennedy Township, and they can't understand why the monthly payment is so much lower there. The answer is property taxes. South Fayette School District has significantly higher property taxes than Kennedy Township and the Montour School District. In fact, Kennedy Township is known for having some of the lowest property taxes in Allegheny County. That's why I always tell my buyers not to fall in love with a community until we've looked at the complete monthly payment. The purchase price is only part of the equation. Property taxes can make a dramatic difference in what you actually pay every month, and your real estate agent should understand those differences and help you compare communities before you decide where to buy. The third is homeowners insurance. Western Pennsylvania has some beautiful older homes with incredible character, but older homes can also cost more to insure than newer construction. The age of the home, the type of construction, your deductible, and even your credit profile can all affect what you pay. That's why I encourage every buyer to get insurance quotes before removing contingencies or finalizing their monthly budget. The bottom line is this: don't fall in love with the listing price, fall in love with the monthly payment, because at the end of the month, that's the number that you'll actually be living with. Before we get into the next 2 rules, let me ask you a quick question. What's been the biggest surprise about buying a home in the Pittsburgh area? Leave me a comment below. I read every one of them, and your question may even give me an idea for a future video. Now, let's get into rule number 4. One of the biggest misconceptions I hear from buyers is, I probably won't qualify for down payment assistance. The truth is, many buyers never even ask. Pennsylvania offers several programs that can help qualified buyers with their down payment and closing costs. And there's a new program called K-Date. That's one of them. And if you qualify, they provide down payment and closing cost assistance with 0% interest and no monthly payment. The loan is deferred so that you don't make any payments while you own the home. It's typically repaid when you sell the home, refinance, or pay off your mortgage. Here's what that could mean in real dollars. If you're buying a $300,000 $320,000 home and qualify for the program, you could receive up to $16,000 toward your down payment and closing costs. For many buyers, that's the difference between buying a home now and waiting another year or two to save more money. Pennsylvania also offers other assistance programs, including the K-FIT program, which provides eligible buyers with additional assistance that may be forgiven over time if you continue to own and occupy the home. The point is this: don't assume that you don't qualify. Ask. A good lender should review every program available to you before you decide how much cash you'll need to bring to closing. And while we're talking about saving money, don't forget that today's market offers opportunities that we simply didn't have a few years ago. Many sellers are once again willing to help with closing costs, and many builders are offering financing incentives, interest rate buydowns, or other promotions. If you are considering new construction, don't just ask about the purchase price. Ask what financing incentives the builder is currently offering. Sometimes the best deal isn't a lower price, it's a lower monthly payment. One more piece of advice: if you're thinking about using one of these programs, make sure that your real estate agent and your lender understand exactly how they work and what they mean for your timeline. In Western Pennsylvania, many home purchases close in about 30 days, but some down payment assistance programs require homebuyer education courses and additional underwriting, which can extend your closing timeline to 60 or 90 days. That may not matter if you're buying a home with no competition, but in a multiple offer situation, a seller may choose a buyer who can close in 30 days over one who needs 60 or 90 days, even if the other offers are very similar. That doesn't mean that you shouldn't use these programs. It just means that you need to understand how they affect your offer and have a strategy before you even start shopping. I've helped many buyers successfully use down payment assistance programs, but we planned for them at the very beginning, well in advance. Knowing your financing options before you fall in love with the house puts you in a much stronger position. That reinforces two things. Number one, you have experience with these programs, and number two, planning ahead matters. I think that's a stronger message than simply PFHA programs. It tells you that you need to use this information, not just what the information is. Now, let's move on to the final role, and it's one that surprises almost every buyer who's relocating to Western Pennsylvania. A big mistake that I see buyers make is trying to save a few $100s on inspections, only to spend thousands of dollars after they move in. I understand why. By the time you get under contract, you've already paid for an appraisal, you've put down your hand money, and you're looking at closing costs. It's tempting to think, maybe I don't need that additional inspection. Sometimes you don't, but sometimes it's the best money that you'll spend during the entire transaction. Let me give you an example. Depending on the age of the home, I may recommend that my buyers have a sewer scope performed. A sewer scope is completely different from a municipal dye test. A dye test is typically required by certain municipalities before a property can be sold. It's designed to determine whether stormwater is improperly connected to the sanitary sewer system. A sewer scope, on the other hand, is performed for the buyer. A camera is sent through the sewer line to look for problems such as tree roots, broken pipes, collapsed sections, or other damage that could turn into a very expensive repair. Early in my real estate career, I wasn't familiar with sewer scopes and didn't recommend one to a buyer. About 2 weeks after they moved into their new home, the sewer backed up into the basement. After closing, it became apparent there had been an ongoing sewer line problem that had not been disclosed. My buyer ended up spending more than $15,000 to excavate part of the basement and driveway to replace a damaged sewer line caused by tree roots. That experience changed the way I advise my buyers. Today, if I'm concerned about the age of the home, the type of sewer line, or the property's history, I'm going to recommend a sewer scope. Will every house need one? Absolutely not, but the few $100s that you spend before closing could save you thousands of dollars after you move in. That's why I always tell my buyers not to focus solely on keeping their upfront costs as low as possible. Sometimes spending a little more during the inspection period is exactly what protects you from a very expensive surprise after closing. So, what's the biggest takeaway from all of this? Buying a home in Western Pennsylvania isn't just about finding the right house. It's about understanding everything that comes with it, from property taxes, financing, to inspection inspections, closing costs, and the municipality where you're buying. None of this is meant to scare you away from buying a home here. Quite the opposite. I think Pittsburgh area is still one of the best places in the country to buy a home because compared to so many other markets, your money still goes further here. My goal is simply to make sure that you understand what to expect before you write an offer, so there are no surprises after you become a homeowner. The more informed you are, the better decisions that you'll make. If you're thinking about relocating to the Pittsburgh area, I'd love the opportunity to help. Whether you're moving next month or next year, my team and I work with buyers relocating from all over the country and would be happy to answer your questions. You can call, text, or email me. And before you leave, be sure to watch this next video where I cover 6 major changes happening throughout the Pittsburgh area that every buyer should know before making a move. Thanks so much for watching, and I'll see you in the next video.